It's the weekend rip.
Whoa, spooky season. Oh my God. There's nothing scarier than a boring market. Am I right?
Nothing scarier.
There's nothing scarier. Maybe
What
that
do you-
capex on Meta is a little scarier.
What are you dressed as?
I'm dressed as a dingus who has poor risk management. I'm dressed as a retail trader who doesn't know about risk management.
Jem had a little costume he was showing us from the Star Wars universe.
This is we're going Jedi. We're going full Jedi tonight.
All right.
Obi-Wan. Jem Obi.
Oh, I was going to say Obi-Wan convexed something
Croissanti.
about convexity. What's that?
Obi-Wan Croissanti.
Yeah, there you go. Yeah. You should be an Iron Condor or something for Halloween, man.
Iron Condor. What does that look like?
I don't know. A condor with just like black wings made of metal. Yeah. I'm sure the guys on the options trading floor in Chicago would love that. Eat that up. Oh man, it is spooky out there. Welcome back, everyone. With us is Cem Karsan. We love having him. You love having him. You love haranguing me for not just asking exactly the right questions. So we're gonna do our best this time. Jesus Christ!
Should we start off with maybe one? Some people were kind of putting some questions in here. Should we?
Well, let's. Because I had a little bit of an outline that I wanted to go through to get to exactly that stuff. Because we had
I was just gonna shut up the haters with asking their dang.
Well,
questions
haters
wrong.
should shut up regardless.
Yeah. Okay. How about that's a good rule.
Yeah.
If you're a hater, shut up.
So anyway, shout out to the haters. Cem, we had a very big week with some tech earnings, but I think what a lot of people are focusing on is signs of a weakening consumer. Couldn't be me. I'm a very strong consumer. I love to consume. You're constantly consuming.
I'm weakening though. I am weakening.
You are weakening?
I'm trying to pull back.
We're offsetting each other then.
There's nothing like looking at your credit card bill and doing the the little breakdown of what you're spending money on and going, oh, okay.
Yeah.
Maybe I should be a weakening consumer.
Yeah. I hear you. Well, it was Chipotle. Their earnings highlighted the weak consumer, and it was quite alarming. A lot of people are saying that it's because they have an inferior product over the years. They're charging more and more for less and less.
The guac prices are out of control.
The guac prices are crazy. But the CEO said, I believe it was the CEO, excuse me if it wasn't, said, we saw a broad-based pullback in frequency across all income cohorts. Since then, the gap has widened, with low to middle income guests further reducing frequency. And that's guests with income below 100 grand, which represent 40% of total sales. They're dining out with less frequency due to the economy and inflation concerns, particularly the 25 to 35 age group, which is, they said it's not unique to Chipotle and is occurring across all restaurants and discretionary categories. And then you had Kraft Heinz with a similar sentiment with their earnings. They said that they've got a lower expectation on consumption in the U.S. and they expect the entire industry to get worse. Cem, what do you think, man?
I mean, yes, the bottom 50% will not do well under a Build Back Better bill that cuts, fiscal spending to those people and sends it to the top 1%.
Yeah,
that's how it works. The lower income people will not do well if costs are going up, and those need to be passed on to them because things are getting expensive. This is not new information. This is well known and understood. It is what is driving the populism and the frustration. However, the top 10% of the distribution now are more than 50% of all consumption. And that is the highest it's ever been. And if the market's up and their assets are making money, they are not the one, that cohort is doing well. And so this is more than ever, and we've been talking about this for some time, not a monolith. Like consumer is not a monolith. It is broken up into two very distinct parts. It did not used to be that way as much. It used to be, the masses would be the consumer broadly. But now, again, top 10% is more than 50%. So that's a big deal. In the 1990s, late 1990s, it was about 33%. So, it's almost 50% higher percent of the consumption in the United States since the late 90s. That's a big difference in terms of how the economy works here in the United States.
Yeah.
So that wealth effect you hear about is incredibly real, more than ever. And so with the market now up 50% off the bottom, and up more than 15% for the year. A lot of other assets in particular that are owned by retail are up much more. It is a bifurcated market. I would expect that pure masses consumption like Chipotle and Kraft Heinz would not be doing that well. That's not the stuff you probably want to be owning right now, especially given how their margins are thin. And, there's a lot of particularly at Kraft Heinz, like a lot of imported stuff. But there are things that are more consumed by the top 10% that will do better. And so I guess the point is it's nuanced. It's not as usual, not just up, down. We are dealing with a very kind of diversified market. Now, that said, if that part, the broader economy, is not doing well, and then markets were to go down and drag down the top 10%, then you could get a really reflexive decline. And we know that. I've said for a while that the biggest driver of liquidity in the world by far is the markets themselves. So, it's this reflexive loop that we need to be, aware of. The more markets go up and the more the structural liquidity things that we talk about, which are not quote unquote fundamentals, but they become fundamentals. But the more that happens, the more the market will continue to make it through and muddle through a pretty stagnant situation with a broadly inflationary profile. And that is what is called, you may have heard of it, stagflation. That is where we live and where we are increasingly living in. And again, this is a part of a longer trend. This shouldn't be a full surprise for people. So question then lies in liquidity. Where will the market liquidity come from, and where will we be in the next 3 months? And as a function of that, and most people think first on, what's the economy doing? The market will follow. I think it's the opposite. What's the market doing? The economy will follow.
Yeah, we've got one of my questions for you is whether or not that reflexive loop of liquidity is still alive and well today. I would say, I'm assuming that it is.
Yes.
And how that could change, like what you would look for to change. But also with rates coming down and QT like coming to an end, it's just no end in sight, right?
Yes. So not only has the Fed now hopped on board, but the administration is going to have more and more power as we go into next year over the Federal Reserve. I would argue it already has a much more than the perceived power. I think they are strong arming those that are still not under their control. I would argue. Some people would disagree. And so they're going to broadly bend policy towards what they want and eventually have full control. In that context, you've heard "Don't fight the Fed" before. This is, I'm guessing, "Don't fight the Fed" plus the Treasury working together without any friction. Is probably it's something you should also pay attention to. Now, it's not all that matters, but it is very important. And the other things that matter, which are more structural effects, in my opinion, and positioning in the market, are also very positive until January. Come January, we will have a lot of those positive things potentially turn, and be. Yet we will still have those other structural, Fed, Treasury working together. So at that point, I think we can reevaluate. Is my point. But and I do think if we go up and these liquidity keeps going, and then we squeeze into the end of the year, which I think is highly, is likely, then at that point we could, with the liquidity, with the drivers of the structural liquidity off the table, we can talk about whether there are other risks out there, given a slowing economy, which is something that does drag some liquidity out of the market. So, but that's kind of the current lay of the land. So the economy matters. Again, I've said this before. One of the drivers of liquidity is the economy. One is the Treasury. One is the Federal Reserve. Uh, then you have markets. And markets are the biggest, and they're reflexive, so it's a little more complicated. The other ones are pretty straightforward. You can watch them and judge them and kind of say how much is this affecting liquidity and not. The economy is slowing. We've known that, and it is accelerating. The Treasury and the Fed are incredibly being aggressive and will continue to be. So right now, the other market kind of structural flows underneath it are supporting, and those are there. So markets are likely to be the decider, and that's positive. But again, when those are gone and markets are more of a question mark, and there's a reflexive risk, and again, come January, let's talk about that.
Gotcha. Yeah, it feels very crazy making to see. I mean, it's like every day we're getting news that there's layoffs and consumers struggling, and like the highest number of auto loan delinquency since 2009 kind of thing. And yet the market just doesn't give a shit. It's just,
It's not.
Are we just going to
fundamentals.
see this? What's that?
It's like fundamentals don't matter. They're not
Yeah.
the major driver of liquidity.
Yeah.
And
So-
and they will be at some point, and they will matter, but
Yeah.
not yet.
Yeah. Do you think
Also in places, that are kind of surprising, especially when you're thinking about those Amazon layoffs of, you would assume those would come from positions like warehouse positions or something, but I think those are corporate positions that are being laid off.
Yeah, AI is playing a major role in this, and this is, I think, and we can't say for sure, but I think it is part of the story. It's not just a broad slowing of demand, but that is part of the story, and it's that part of the economy is a loop, right? Because the more those people don't have the payments from government and don't get the support they need, and then the job layoffs start happening, then you have less demand, and then there's kind of a loop, right? So it does matter. I'm not saying it doesn't matter, and obviously it matters even more to cultural cohesion and politics and outcomes in the coming year, and we can talk about that because those can make big structural differences. But in the short term, there is this bifurcation that is increasing, and we'll have to watch it. AI is definitely playing a role, and I think will play an even bigger role next year. That's actually one of the things I want to talk about, but we'll get to that, I think, as we go.
Yeah, one of the things in a recent interview you were talking about regarding the bubble, the AI bubble, whether or not it's a bubble, I know people like to debate, but regardless, you said be long because, I mean, I like what Stan Druckenmiller says about bubbles or just markets in general is that they are smarter than you. Markets are way smarter than you. They're smarter than all of us, and there's wisdom in the markets. I believe that's exactly what he said. And so, yeah, do you still kind of stand by that despite Meta's kind of surprise drop, or do you think that this is maybe one of the first shoes to drop in this whole capex overspending kind of thing?
Yeah, look, fundamentals, which I know everybody wants to talk about, are like elevation, altitude on a plane, right? Like it's not what's going to drive the outcome in any predictive fashion, but it is when the gas stops, ultimately all that matters. So the further off the ground we are, the fatter the left tail is. That's what it's good for. It's good for risk management. And it's also at some point, right, the further off the ground you go, the more it can drive acceleration and liquidity draw if the market does decline, and it's a loop, right? That said, it is not a good short-term indicator, meaning weekly, monthly, quarterly. It is not a good predictor of outcome at all. It actually almost has no force on the outcome, the buyers and sellers. What does matter is liquidity, as we've talked about. And the reality is that right now, sitting here going into November 1st, we have a bunch of things, a dramatic number of things that are very positive for liquidity. Never mind the Fed and the Treasury, which we've talked about. Just from a structural perspective, The market's up 15%. $500 trillion of long assets. Give or take, that's $75 trillion of new collateral. Some of it's been reinvested throughout the year, but a decent chunk of that goes to work on Jan 1, and everybody front runs it. This is a leverage machine, and $75 trillion of new collateral is a huge amount. The average amount that moves markets on a daily basis is $50 to $100 billion. It's like it's all just a very leveraged reality. And so if we're going to have, I don't know, $7 trillion go to work on Jan 1, that probably is something that people understand that, and that's incredibly supportive, and people front run that. So generally that's positive, but when the market's up, that's even more positive. So that's good for things this year. The bigger the market is, the more that effect matters, because it's a momentum machine. So that's also really, markets are bigger than they've ever been. Leverage is bigger than it's ever been. So let's start there. That's one that's pretty well understood and incredibly important. We have dramatically more option structured product positioning. It's gone from $500 billion to $2 trillion in the last 3 years. There's a $750 billion increase in structured products this year. Guess what? The Vaughn and Charm flows that I talk so much about is going to be a lot bigger this year. That will be the case. Those are always the strongest in the end of the year. Why? Because December and January OPEXs are the biggest expirations, because a lot of people for many years put on positions for the end of the year. A lot of these structured products are tied to the end of the year. So those are bigger at this time of the year, and they're much bigger than ever. Okay, so that's bigger than ever and a lot bigger than ever. The same rules apply to that as always. We have much more holidays during the end of the year than any other time of the year. Not just holidays, but people take a lot of time off. November, you have a week of Thanksgiving, essentially. December, we got a week of Christmas. Then we got, New Year's. Put those together, and not just there's a lot of days off and less volume, but November, those 2 weeks, November, December, something people don't talk about, Thanksgiving, Christmas, fall in that classic window of weakness. They are the weeks right after OPEX. And so we fast forward through these windows of weakness in November and December. And liquidity during this time of the year is very low, much like summer. And so the vol compression also in this time is more exaggerated. So you got massive vol compression, bigger Vaughn and Charm flows, acceleration of time and volume weighted time that drive massive supportive flows. And we have a massive reinvestment, releveraging flow that comes January. So these are like just the structural realities of where we are. And then let's add in the fact that hedge funds, which are doubled in size in the last 2.5 years, and the long short equity world, which has doubled as part of that. We already saw this summer the pain and the degrossing that happens there during times of low volume. We're going to get more of that this year, and they're still underweight, not 0 percentile where they were this June, but 35th percentile. And they have dramatically underperformed this year, and all the institutions have. So guess what? That chase you hear about, it's going to be bigger than ever.
Good God.
So why would you step in front of that buzzsaw? Why would you fight those flows? And by the way, bubbles, generally speaking, mean markets move faster at the end because people are underweight for a reason. It is logical if you're at record valuations higher than the tech bubble that you're going to say, maybe I'm not going to be 100% long.
Yeah.
Well, so institutions are underweight. Well, so if things go up, guess what? They will eventually get squeezed back in. That is also less longs to sell into a rally. So it is less supply. So these things all are supply and demand factors. We can talk about, the average consumer and what they're doing, but how much does that affect the value of these stocks as a whole? Not all that much. And so you take all of that, which I said, which are structural flows at the end of the year. Now, these are all specific, by the way, to the end of the year, till basically early January and OPEX. And then add an administration of Federal Reserve who are actively trying to push price. We can try and short this market if you'd like.
Yeah, let's do it. Let's do it. Let's try it.
The odds are not in your favor.
Yeah.
Yeah. So, but does that mean this market's going to go up forever? No.
Right.
Does this mean like, this is an inevitable, like we're going to be up 50% next year? No. The market has become very fat left tail. When it ends, it will not end well. It will be a much bigger potential move with much bigger consequences when it does come. Because we are in a bubble.
Yeah.
You can call it whatever you want. It's a bubble. It's whatever. Like, what we know as fact, our valuations are higher than they've ever been on most every metric.
Mm-hmm. Yeah,
That's
but
a
quantum
bubble.
computing is the future.
Was 2000 a bubble? Was the tech bubble a bubble? Okay, yes, it was. We are higher than that. And I want to highlight in 2000, which I was trading and very active during, right? It was a completely different setup. Completely, like way more bullish setup in the context, not in a liquidity perspective, but from a fundamental perspective. The USSR had just collapsed. The US was the undisputed hegemon of the world. Interest rates were just starting their way down as we began in 96. Greenspan realized that we could lower the natural state of employment and increase dramatic liquidity from the Federal Reserve. So this was pre all of the experiment, the liquidity experiment that we've driven. Interest rates were on the structural secular move down. There's so mmany reasons, but China was a shell of what it is here 27 years later. We didn't have the Fed and the US government hadn't lost some level of control. You can argue they're still very much in control, but relative, it was a very different setup. And so we're at valuations that are higher than that with dramatically higher risk. That is a bubble. And distributionally, which is how we like to think of things, that means we have a fatter and fatter left tail. We are very far off the ground with lots of potential things that can take us there. That does not mean you should try and short the market right now. That means you should probably be long some convexity on the left tail in case something ever happened.
Or at least get out of the way. Like sometimes having no position is in itself a position, which is something I have to remind myself of frequently.
Yeah, sure. That's another. You could go just not play the game.
In the sense of like the SPY and the SPX, like I don't need to have hedges on but I also don't want to just go long calls in case it just kind of creeps up and they go to 0 too.
I don't recommend that right now. People are uninvested.
Yeah.
I think there is a much better way to play this, which is to invest tactically in things with great fundamental values. There are parts of the market that are still very cheap in the context of a much bigger market. You don't have to be in the S&P. There are structural thematic things that are likely to happen in the next 5-10 years that could be massive tailwinds for certain corporations. And a lot of those happen to be cheap. And meanwhile, you can own the left tail or replace or not be short the left tail, express that long positioning, as I've said, with right tail, which is longer dated calls. There are ways to do this very proactively, like with these are good investment theses, but it doesn't mean just be long the S&P, right? And I think that's the part that is hard for some people, but that's why we're here.
Well, speaking of the S&P, you freak us out in a good way because it's interesting.
We send each other your tweets and go, "Oh God,
we're so fucked. We're so fucked." But like you tweeted this one. If you want to try to pull it up, it's it's Jem's tweet with the link, like midway down the doc. You talk about the United Healthcare guy's murder, Tesla dealerships getting set on fire earlier this year as an example of just the rise in populism. And then you go on to say here, as AI's influence grows and the layoffs begin in earnest, the steady and growing populist drumbeat will soon upshift into a higher gear. The next target will not just be politicians. The impulse that will increasingly unite the angry hordes on the left and right will be the shared ire against the top 10 corporations in the S&P 500, which now represent a record 40% of the index's market cap. Expect an increased backlash and an uptick in global antitrust activity. I really like that because
We like that.
well we've been saying that
So does everybody else. That's the point.
yeah, people's anger and stuff has been misdirected, and the politicians and the powers that be have been just putting on a clinic in how to manipulate the masses to focus on each other, to focus on immigrants, to focus on
Same as it ever was.
yes. And meanwhile, the real target should be, you know, fucking data centers. And I'm not advocating for that, obviously, but you know, I'm surprised that we haven't gotten there yet. And I obviously don't hope for any kind of social discord generally, because I think that would be bad for everybody and people could die and whatnot. But I worry that we'll never be able to unite against a bigger enemy.
It takes
and we're just going to be
a crisis.
stuck.
It takes
Yeah.
a true crisis. It takes people for people to come together. They need to feel a similar pain. They need to be united by something. Right now, we are in deflection mode by politicians, and we are able to kind of make people angry at one another because nobody has shared enough anger. But you're right. This ultimately is the real anger. It's not just politicians in general. And again, if you're saying politicians in general, it's easy to be like, it's not my politicians, it's your politicians. It's not my policy, it's your policy. But when it's corporations, guess what? Both sides are going to start. Right now, the left has been talking corporations, but the right has not. And what I'm trying to tell you is the more this gets to a point where people are losing their jobs, and not just to corporations, but to AI and the things that were built by corporations, and the economy begins to slow, particularly for the masses, which is what we're starting to see, which is, I think, has always been the main challenge. And if inequality doesn't get fixed, essentially, which again, we were making some inroads towards it, but now we're moving back away from those inroads. People feel that viscerally, and that brings people's anger, their directed anger to other entities. So my opinion is we are seeing this under the hood. We have seen it for some time. It is growing, and AI will be is beginning to become, and I think next year we're going to see an incredible accelerant to that. And I think that's something that people aren't paying as much attention to as they should. And I think what you will possibly see is a administration which has been very friendly to business as we get towards midterms next year, and as we get towards the bigger election in 3 years, start to have enough pressure on them politically to start to point the finger at corporations as well. And if both sides start doing that, that's when you start getting antitrust and start getting policies that are very not pro corporations, particularly big corporations. And so I think nobody's been talking about that, but this is a thing that eventually does happen during these cycles historically. And I think it's the next shoe to fall. Again, will it happen in the next year? Will it take 3 years? Hard to say. We'll see. I think it's getting going. The question is, to what extent does it really get going? And some of that is controlled by politicians themselves.
Things, I mean, they already feel pretty dire. When you're talking about the top 10% being making up 50% of expenditures, I mean, that's a massive difference. Like you're talking about from the 1990s. I mean, we used to have a middle class that just like doesn't exist anymore. We have this kind of bifurcated economy of haves and have-nots, and
it's accelerating. And this is what I've been trying to say about the bigger cycle. I've said this for 4 or 5 years now, but this is what's leading to the populist movement, and it was left and right. It was Trump really taking the right, kicking and screaming left with rusted out cities in middle America and his populist message. In his first term, he did more, not exclusively, but more populist policy. The tariff policies this time around are also populist. However, the big beautiful bill and several other things they're doing in terms of like cutting government and all those things are very still right, very counter populism, and they're kind of putting that under the veil of other things, but they are very, very business friendly and poor unfriendly. And the reality is that people may not see that or understand that. But when it starts hitting their pocketbooks, the sentiment gets worse, right? And becomes more populist, and eventually it becomes particularly into market declines and economic declines, which we haven't seen for a little while. The impulse becomes, again, fiscal spending. We are not going to do another big bailout. We are not going to do only Federal Reserve monetary policy into the next decline. Much like during COVID, it will be a massive fiscal response when it happens again. And that will be inflationary again. And so this populist impulse is dramatically inflationary, structurally so. It will come in waves, but it is a function of this inequality and the anger surrounding it. And so we can try, Trump can try and move away from that and do other policy. But ultimately, he and any other politician is going to get pulled back into that vortex over time politically. This is what happened to Nixon. Nixon was a Republican. He was a very, he opened up China. He was a very pro, he took Arthur Burns and tried to get him to they cut interest rates 4%. That's all very business friendly stuff. Ultimately, when it came to his reelection, he ended up being, it ended in price controls, right? It ended in dramatic populist policies because the political forces were too strong to avoid it. And all I'm saying is that is where we will continue to go. And that is what will continue to drive stagflation, structural inflation, and stagnant growth.
Yeah, I mean, it's very likely. I mean, we could see it soon. I think, it's October 31st. Tomorrow's November 1st. With the government shutdown, I believe we're going to see SNAP benefits affected starting this month. I did see I think there's a case being decided right now whether or not the judge is going to force them to use some kind of some fund that they could be forced to try to fund SNAP benefits for this month. But yeah, I mean, things are going to be bleak very quickly.
Yeah, and the response will be fiscal spending. So the one thing that nobody's been talking about for some time is inflation, right? Everybody's like, oh, we're getting to deflation, like economy's slowing, like this is a structural phenomenon. It will come in waves. This is not a 1 week, 1 month, 1 quarter, 1 year call, but expect that after whatever decline and cyclical slowdown, that the secular trend will continue and it will come very quickly. And I think that's what gold's been telling you. I think that's what crypto's been telling you. I think that's what certain rotations into certain assets have been telling you. And I think there's still some that are that have not taken the mantle, which will. But if there's something to do under the hood, that reality is still very much in check. There are other things that are happening too, which I think are very inflationary outside of that, which are tied loosely to these populist realities. The tariff policy is that protectionism, which is part of populism, is leading to increased global conflict. We talked about this again 4 or 5 years ago, way before Russia invaded Ukraine, before Iran, Israel, Gaza, and I've also been saying that it will continue to expand, and you better believe we're going into Venezuela before too long. So
that's the other thing I wanted to bring up. You've been very actively saying that we're going to bring democracy to Venezuela.
Yeah, it's pretty.
And you had a very great. It's too long to quote, but you had a really great thread on it that I really enjoyed. So go to Jim's Twitter to find that. But you were talking about how much oil reserves Venezuela has and how they've kind of slowed down production. And then we're now targeting cocaine manufacturing facilities there, and we're going after the boats and sending aircraft carrier.
I also believe there was some kind of weren't there troops on the ground in maybe Trinidad and Tobago right off, or
yes.
They were doing some kind of ground exercise in Trinidad and Tobago right off the coast of Venezuela.
Correct. We moved 10,000 troops to Puerto Rico. A bunch of those moved to Trinidad and Tobago, about 6,500 troops. We've sent one of the biggest aircraft carriers in the West out right off. And again, I don't know that drug enforcement needs the biggest aircraft carrier in the military to execute its.
Well, they're
its,
poisoning our
actions,
children with fentanyl.
clearly, and that's fentanyl does not come from Venezuela, but that's what people believe. It's like weapons of mass destruction all over. Like if it's like, let's just create something that people know is a thing, and then put it on top of this, and then that's the reason. That has nothing to do with anything. It's nonsense. The realities are, and by the way, some people are going to take this as like anti-Trump. I want to be clear. If this is a game of risk, I'm going for Venezuela, right? Like Russia's moving for Ukraine, right? Like China's moving on Taiwan, Israel's moving on Iran. Like everybody's taking the most important asset to them, and it's realpolitik. Okay, like we can play like, we're all friends here, don't hurt your friend, blah, 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 blah. Like that's not how the world works. That's pretty naive. The biggest, potential threat in this hemisphere to the United States and its biggest potential reward simultaneously is Venezuela. It has more oil reserves than Saudi Arabia. It has rare earths, precious metals. It is on the southern shore of the Gulf of Mexico and is a massive strategic spot for the United States. Meanwhile, it's run by an administration that is propped up by, and has been for a long time, by the Chinese and the Russians.
Oh, good.
So
we're in
why
their good graces.
Why, if you're in this situation, again, if this is realpolitik, and I'm not advocating for regime change, but if that's what the world is doing, and we have two choices in a game of risk. You can go defend Ukraine, you can go defend Taiwan, you can go defend whatever place you want, right? Or you can go on the offense. And that's what's happening. That's what's happening.
What's your timeline, you think? 6 months?
No.
Seems way sooner than that, huh?
I would say December. The window for
oh my God.
The window for military action in terms of weather is December, early December through mid-April. So it should happen before then. The other thing is, once you've moved all these troops there and stuff, you're not helping yourself by waiting. There's all kinds of people. Russia didn't move troops like 6 months ahead and then attack. They moved troops, 3 weeks before and then attacked, right? And
it's just wild that he's doing it under the guise of protecting us from drugs when it's just
wild? Has any regime change that the U.S. has ever done ever been under the direct, or has it always been covert under the guise of X, Y, and Z?
Yeah.
I mean, come on, let's not be naive. And it's not just the U.S., it's every country. It's just how you got to play a narrative game. And by the way, the clearest sign is day that this is happening is that Machado gets the Nobel Prize. Rubio, very well documented, and at all about 9 months ago, nominated her and pushed her nomination. She's been at this for decades. Why now? Because you need a narrative, like somebody with a nice, good, face that's doing good to take the bad guy out and put them in charge, right? And you need the people of Venezuela to have a positive kind of somebody who, we're doing good in the world here, guys. That's what we're doing, right? That's the story. And I'm not saying that we may or may not be doing some good. That's a very that's a complicated topic. But I'll tell you what, we're not doing it to do good. And if that's what you think, then you don't understand realpolitik. And so that's what's happening, and that's what's likely to happen. Now, is it going to be outright invasion, or is it going to be covert? They'd prefer it to be covert. They'd prefer it to be, done, more under the guise of a more internal Venezuelan action. But if they're not going to get that, they're going to do what they need to do.
I don't know if you've seen, but people have been pointing out that mainstream news outlets like 60 Minutes have been doing reports on, the terrible conditions in Venezuela, all these things, and people have been pointing out like, oh, they're priming you to be able to go like, look, we're liberators, we're helping. They were living.
Maybe I should sign up and help.
Yeah, and it's wonderful for it's anti-socialism, right? Which is a great kind of right-wing kind of talking point. So politically, it fits the narrative. It's also great strongman. You win a military. The Department of War wins a military action. That means people who love a strongman are more happy with said strongman.
Yeah.
So
we've got Polymarket up right now that the 68% bettors are saying 68% chance by December 31st.
Yeah. When we talked about
47.
this, it was like 25%, by the way. So,
oh my God.
So yeah, and by the way, it is other than the narrative and what that could do to how other people see the U.S. relative to where they see it, or the other consequences from a pure just like strategic perspective. It's a net positive. You lower oil prices, you create new business, you throw up your defenses on your in this side in this hemisphere, etc. So I mean, anyway, I think it is. I was saying it was 50% about by March, April, about a month ago, when everybody else thought it was like 1 in 4, and now I was underestimating it. Like I think it's now way sooner based on what I'm seeing, and it's way more probable. So there you go. But yeah,
well, we got a lot to look forward to. Then we got. Cool.
I also think China will move on Taiwan in the next 2 years.
Yeah,
I think that's also part of why this is happening. I think this is a clue that the administration sees that as likely, and that as they see it, they're probably not able to go defend Taiwan or do whatever, and there's not an appetite for it, nor do they want to, and so they kind of. I think this is kind of a clue, and I think it's not a surprise either that we're starting to have tariff pushback and issues with China again. It's kind of that's heating up. I think there's a lot of things moving underneath the surface, and I think this Venezuela stuff is kind of where there's smoke, there's fire, right? And I think this is another puff of smoke kind of seeping out of the house, and so I think it gives you some clues about the total state of kind of play. I do think it actually, in my mind, increases the odds of China, Taiwan, and the information that might be out there. We talked about in 2022 when Russia invaded Ukraine that the likely highest window, we actually circled a date and we said November 2027 is the highest probability timeline for, and we weren't the only one, for military action of China, Taiwan. Like there's other periods, but that would be the highest probability. And I still think, in the next 2 years, the timeline might be going up. So if anything, 26, 27, again, that November period is the most likely for some action there.
So if I'm gonna go visit Taipei, I should do it probably soon.
I went last spring break, so yeah, get it in now. Same true for Japan. Go get your Japan time in now before they're involved in that conflict, and anywhere in that neighborhood.
Wait, so you're saying like, there's just going to continue to be violent reverberations throughout the world. It won't be isolated to just China, Taiwan.
I said this 4 or 5 years ago that the next 10 to 15 years will look a lot like the 1930s and 40s, again, I want to be clear. You guys have heard about the fourth turning concept. I'm not just leaning on the fourth turning concept. I have a much more kind of sophisticated kind of why these happen and how they're happening and how it's playing out. So it's not just following a cycle, but you can't help but understand that a human lifetime is about 80, 90 years. And 1775, right? We had a revolution, right? Or 1770, right? Fast forward to 1840, 45, we have a civil war. fast forward to 1920, in 1929, 1930, we have a Great Depression, and then that leads to a World War. Here we are, 2025, right? These things happen for a reason in cycles. I could get into that. We could do a whole show. I've done it in other places. To me, it's very clear, the pressures. It's not a 1 year, 2 year, like it's exact. It's not even a 5 year exact, but we are in that populist stretch where protectionism comes up, and there are all kinds of pressures given what's happened for the last 40 years that will lead us into a increase in global conflict. And this is a bigger one than the last one 40 years ago. It's really an 80-year one, which is, which tend to be much bigger. And so, yeah, I think all the signs are there. We moved well away from our corporate sending money, lower interest rates, money to corporations, growing corporations and inequality through that process, and globalization, technological development. We've gone through that 40-year period. And the net result is massive inequality, a need for a rebalancing of that, a political demand in all countries for that. And that protectionism leads to my people versus your people. That's populism. And that ultimately is unavoidable. If we are going to fix inequality, that leads to global conflict. And it's just the state of play and where we are. And I would say, most people are like, holy crap, that's awful. Like, how do we avoid it? I would say we need it. Without crisis, this system is in massive disrepair. These are incredible periods of revitalization, restructuring, renewing the original ideals. That's, without a civil war, this country would not still exist. The Western ideals would not exist. Without the World War II, these ideals and the strength of the ideals and the structures of government would not exist. Without, I'd argue Vietnam, the 1960s and 70s and the equality movement and all the things that came out of that, we would not be where we are. So in the words of the Joker and the old school Batman, this world, this town needs an enema. We need a crisis. We need to clear the underbrush. Everything has become so sclerotic. We are in a state of entropy, and the only way out is unification through a real crisis, and that's where we're heading.
Damn. Well, at least you have somewhat of a positive.
It's true. Yeah.
I mean,
but prepare yourself. It's not going to be easy.
Yeah.
Yeah, they're not fun. These aren't fun periods to live through. That's for sure.
Yeah. Have you seen the prices at Chipotle? I mean, Jesus Christ.
Yeah.
All right.
But I mean, the greatest generation, like some of the most transformative times and things are a function of those. And actually the entropy that we're amidst and all the awful stuff that we're kind of experiencing is a function of the lack of dealing with those things.
Well, I think that's a good spot to wrap it up. Very spooky stuff.
Great for Halloween, right?
Spooky stuff.
Oh, a perfect theme.
You dressing up with the kids at all?
So this is all those other things aren't sad. You know what's sad? My daughter is now 12. My youngest child is 12 and no longer wants to go trick or treating.
Oh,
so
man.
My 14-year reign as the Halloween maestro has come to an end. We have an awesome set of massive spiders lit up all over the house, all kinds of crazy. So we're going to sit home and watch the other kids come by and hand out candy and maybe have a couple glasses of wine.
Hey, you still got Christmas.
For now.
Yeah, you're never too old for Christmas.
No, everyone loves gifts.
Yeah, everybody loves gifts. Everybody loves candy.
No, it's fun. I'm looking forward to a nice night and handing out candy. It should be fun.
Very nice. Jem, it's always a pleasure speaking to you, and enjoy your weekend, and thanks to everybody for tuning in.
Happy Halloween.
Happy Halloween, everybody.